Hey, hello traders. Jeff Drake here. Hey, we're going to start our chart pattern series with the granddaddy of them all. This is the chart pattern you should know. In fact, people use this chart pattern without knowing they're using this chart pattern because they're looking at levels that the chart has previously honored or broken in order to help them make trading decisions. And of course, I'm talking about support and resistance. Let's go ahead and jump right in and learn about what support and resistance actually is. Okay, well, support and resistance is basically lines or levels as far as price is concerned on a chart. We can see here we have both support and resistance plotted on this chart for United Continental. Now, let's take a look at this. What happens is you have a pivot that is formed. January of 2019, United basically pulled back, and then around 78, just below it, it formed a pivot and moved upward. All right, at that point, it also formed an upward pivot right around the $90 mark and then moved downward. What we have here is the beginning of support and resistance, because as price pulled back here in March of 2019, it tested this level just below 78, and it basically bounced off of it again. Now we have an actual support level. All right, one pivot is not support, it is potential support. But once you get that next bounce, that second touch or second test, and you see a reaction to it, what you have is buyers coming into the market and creating this support level. Now, the same is true with resistance. Here we have the security moving upward in March and April, testing that $90 mark right on the button there. You can see it basically tested it, and then we had sellers coming into the market pushing price lower for United. We have now established resistance. Again, just like support, one turn is potential. The second time it's tested, it has been proven to actually be a resistance level. Now we have a level to watch moving ahead. Again, pushing downward here. Here's another test of that level just below 78 for United. The support holds. That means buyers have come into the market, pushing the price upward very rapidly, actually, here in June. And then we are once again testing our resistance level. All right, so just to recap, if we are looking at a level that basically is providing buying power coming into the market, once it's tested, that is support, and that's what we have here for United just below 78. However, if we have another level where sellers come into the market pushing price away from it, what we have is resistance. These are incredibly powerful levels in any time frame as far as trading is concerned, and it also goes for any security. So what is it used for? Well, as you may have already guessed, you can basically make buying and selling decisions based off of support and resistance. We have now moved over to a chart for MGM, and we see nice resistance established, nice support established. So once we have this established support and resistance, let's say we have bought MGM off this turn of the potential support just above 30 here. It's moving upward. A great place to take profits would be right at that resistance just above 34. Now, something else to consider is the fact that it's not a hard line level. It's more like an area, right? And this is a good example here in October of 2017 for MGM. We can see it did push through support, but buyers did come in, pushing it back into the trading range it established. So support didn't hold firmly right at that level, but support was realized once buyers came into the market, pushing price upward. There's our resistance tested yet again on MGM. You can see how this works over and over again. Now, what happens when it's broken? What you have is, in the case of resistance, buyers coming into the market strongly pushing price upward. Why? Because the market has now become more bullish about that security. So in this example for MGM, we had a test of this well-established resistance level. Look at buyers pushing this straight through. MGM ran very hard once resistance was broken. And of course, the same can be true for support. Let's say, for example, maybe security had pulled back and tested this support, and then you have it falling through. Well, what happens is people say, all right, if the buyers are not going to come in and help establish this level of support anymore, I need to sell because this is going to go lower. All right, so those are the basics of support and resistance, and trust me, all you need are the basics in order to use support and resistance effectively. let's look at some other ways that we can use support and resistance. All right, well, what we're looking at here is, again, MGM. This is in 2020, though, for MGM. And what we see is support and resistance. However, chartists would refer to this as a consolidation or a tight trading range, as it bounced between 20 and 24 from August through November. So the point I'm trying to make here is that all of the major chart patterns are basically looking at support and resistance. You can call it a consolidation. A consolidation is simply support and resistance levels. Also, trend lines. When people draw a trend line, it's basically support or resistance. You can also draw trend lines on the top of a chart as well, but it's basically saying these are levels where buyers will come into the market, support, or sellers will come into the market, resistance, right? So if you look at all these other chart patterns, you may think, okay, should I really learn this one, and how does it react, and so on and so forth? Remember, you're basically drawing lines, and they are, for the most part, support and resistance lines. All right, let's look at the pros and cons of support and resistance. And what we've seen is that it will show levels where price can reverse. Support would reverse to the upside, of course, resistance to the downside. And if those levels are broken, then what we have is buyers coming into the market if resistance is broken, and also sellers coming into the market if support is broken. Also, those broken levels should not be forgotten because they can also provide continued support. Let's say if resistance is broken, it can turn into a support level. And of course, if support is broken, it can turn into a resistance level. All right, so what are the cons of support and resistance? Well, not all charts are well behaved, and so in certain markets, it can be elusive to try and determine that we actually have support and resistance at certain levels. However, remember, it is not a hard line level. So when you're looking at charts that are a little more volatile than we may actually like, remember that these are zones that we're looking at, okay? It doesn't have to be an exact level to help you make trading decisions. And of course, the other con is there's false breaks. It's just like anything else. It doesn't work all the time. However, the beauty of support and resistance is that even if, let's say, we had a resistance break and price kept going upward, we should know that's a buying opportunity because the market has now become more bullish than it had been in the past. All right, so that wraps up our support and resistance episode of our chart pattern series. Once again, if this was the only chart pattern you had, you would do just fine. Be sure and look for the support and resistance levels in your trading and practice reacting to those levels in order to improve your success level. Until next time, this is Jeff Drake, wishing you the best of luck with every trade you take.